Joe, good to see you.
Good to see you.
Welcome. You've been very generous with your time, and everyone should know you were listening along with all of us as the Treasury Secretary spoke. Will D-Day work this time?
The sanctions, though, as Kayleigh said, we need more details, but it seems very strict and potentially very groundbreaking and broad in a way that sanctions have not been used before. The fact that the U.S. is trying to pressure Iran to the negotiating table, to me, is a positive. We're not involved in military kinetics at the moment. Hopefully that will remain the case, and that somehow there is a negotiation that takes place. But of course, if the sanctions work the way the administration would like them, and the regime crumbles internally because of it, well, that will also be effective. So it's a strong negotiating tactic. We'll see what happens. I don't know exactly how they're going to be implemented, but right now, from what I heard, it sounds like the rhetoric is pretty harsh, and my guess is, Joe, it will be matched with action.
Do you expect that it will be matched with action equally for all of these different countries to which it could apply? He obviously indicated that China wouldn't be exempt from this, Joe, but I do wonder if you believe that the U.S. would really be willing to do its worst ahead of Xi Jinping's visit here just weeks from now.
Right. Well, that's a fair point. And there was one of the questions that asked about the comparison to D-Day, and the Secretary is, allowing there to be some runway before these are fully implemented, so that these backdoor, whatever it was, negotiations, so to speak, backdoor, I think was the word used, or back channel, negotiations proceed, so that there could be some success. So the Secretary is pretty persuasive. He knows how this negotiation process works, which is why I believe intentionally he didn't want to give that much information. The fact that he did allude to the fact that major financial institution could be sanctioned this week, I think is important and probably is raising some eyebrows. So we'll just have to wait and see. But I think he was, as I said, very firm, very credible. We'll just have to see now what actually happens.
It was mentioned earlier, Joe, that as of right now, Scott Bessent is running the war with Iran much more than Pete Hegseth is. And as the administration turns from military warcraft to economic statecraft, I'm just wondering your thoughts on this. You worked very closely with him. Is this something that he envisioned? Did you game this out when you were at the Treasury? And is the country in better hands now that he's in charge of this? Well,
obviously, I'm very happy. Having worked for the Secretary, I'm very happy he's in that position. And I can tell you many clients, it's like the Bloomberg story that was run a number of months ago in Bessent We Trust. I wouldn't say that the Treasury Secretary is taking over from the Secretary of War. The fact is, and when you were in Treasury, you realize it, but the tentacles, the reach of Treasury is just so broad and deep. Undersecretary for Terrorism and Financial Intelligence, Acting Secretary Jean Lang, the sanctions are a big part of the Treasury's portfolio. So the fact that the administration is using economic leverage in addition to prior military kinetics are all part of a larger platform. But I wouldn't say, one department is overtaking another. This is just part of the Treasury's portfolio, which has certainly grown in scope relative to, past Treasury secretaries. And I think it reflects the fact that the President and many in the administration have a lot of faith and confidence in the Treasury secretaries. Hopefully they'll be successful.
Well, when we consider the various challenges the Treasury Secretary now has before him, certainly this is one. But he was asked there repeatedly during that press conference about another, which is climbing long-end rates in the United States, hence the bigger buyback announcement of last week, the promise of some coming fiscal consolidation, which let me know if you buy into that notion, Joe. But could some of the things that the Treasury is trying to pursue, choking off Iran economically and therefore taking even more energy out of global markets, actually fuel the inflationary forces that are creating, in part, his other headache right now in terms of higher borrowing costs?
If things don't work out, yes, that would be a risk. But I was looking at the oil markets this morning, of course, and as the Secretary was speaking, and we're down almost 3%. West Texas. So there does seem to be a view that the market is taking these new actions quite seriously and that they may have some success. On the inflation side, I'm a bit more negative on inflation, just in part because the U.S. economy is booming. It's very strong. and the high productivity and the rising living standards through faster wages, which I see coming through the higher productivity, that will just take some time to play out. So I may have a little bit different view on the inflation scenario, but I understand what the Treasury Secretary is trying to do. I understand what they're talking about from a national security and global security perspective. And in that regard, I might separate the economics in the short term from longer term security and safety issues.
So you layer on this breakdown with Canada and you start to wonder, Joe, Crown Royal whiskey, goose down jackets, ice hockey equipment, confusion over cars. Does affordability just get worse?
I don't think it gets worse. I mean, the inflation data, Joe, have trended a bit lower. The core CPI is around 2.5%. That's not terrible. I think, unfortunately, perhaps the president may have been too aggressive in saying he was going to get inflation down as fast as he'd like. But the trends aren't terrible. So I don't think it's going to worsen the affordability issue. But we'll see what happens. I mean, I understand people's concerns. There's issues in terms of affordability on the mortgage side, lending side. But the reality about rates, though, is that this rise in rates has been global. And the U.S. rise in rates, Joe, has to be put in the proper perspective. It's the strongest economy among the industrialized countries. The demand for capital is high. You see it with this hundreds of billions of dollars coming to the market from the hyperscalers. Like, this is raising demand for capital because U.S. investment opportunities are so strong. And a part that is because of the president's policies of prudent business-friendly deregulation, low tax rates, low taxes on working-class Americans, so there's no tax on tips and overtime. Those are all positives that will help on the affordability side. Maybe the criticism that I level against the administration is they need to maybe message that better, because these things poll very well with everyday Americans, and maybe that's what we'll hear more of going into the midterms.
Well, the midterms are one thing. I'm curious what we'll hear more of this week, specifically from the chair of the Federal Reserve, Kevin Warsh, when he speaks at Jackson Hole, as he's going to have some of these very same issues in mind. Joe, as you talked about your view on inflation and some of the forces that are out there, the demand boom for AI infrastructure, which, yes, is obviously creating more demand for capital, but also could be inflationary in its own right. Do you think he could realistically set the stage for a hike coming soon?
Well, the Bloomberg, as you know, if you look at your Bloomberg terminal, the probability of a September hike is 40%. We've got inflation data on Wednesday. I'm upbeat on the economy, and last year, if you look at what the Fed did, they cut rates 3 times, a total of 75 basis points, to guard against unwanted weakness in the labor market. Last year, private jobs or headline jobs were only up something like 10,000 a month, and that was perhaps at the time the right thing to do. The economy, in my view, is very strong. Job growth is improving. You'd want to take back some of that emergency easing, so I could see the Fed raising rates in September. On Jackson Hole, Kevin Warsh is probably going to say we need to get inflation back to 2%. What I'd love for him to say, which I don't think he will, but if he's listening, maybe he'll put it in his speech, is he should say that the Fed funds rate is the primary instrument of monetary policy, not the balance sheet. Because one of the questions I get from a lot of clients is, what are they going to do with the balance sheet? And that is, I think, partly why longer rates may be rising, to reflect that extra term premium, given all the uncertainty. I don't think he'll say that, but I wish he would.